Hey everyone, good afternoon. Ryan Tonking here from the Black Room. How's everybody doing? Hope you guys are having a good trading day today. Pretty slow day for me. I only took one trade today in the CF. We didn't have that good of a gaps list, and I was kind of trying to struggle to find things on their own page, but I didn't take anything at the open, but we got a nice 2-minute breakout on the CF that happened at 10:30, just after I came on the mic at 10:15. I was a little bit disappointed in what was out there, the list that I had, things that were setting up, and then the CF was mentioned in the room, and as soon as I saw this pattern, it immediately jumped out at me. And so I took this CF trade, and it struggled a little bit at the beginning, which was okay, but created a great opportunity to talk about why I used the stop that I used. Okay, so in today's video, we're going to break down the reasoning. Let me just throw my markers on here for my fills, and we're going to talk about the backstory of where to place the initial stop. Okay, trailing stops, exiting. There's other videos that I have about that, but this is just going to be about the initial stop. Okay, so this was the CF trade. Let's get a couple things out of the way. Only made about an R for me, $208 on the CF trade. That's all I did today. And this was, I was on the mic talking about this, but I also typed the numbers in the room here on the CF. Okay, so here's the pattern. Here's where we were, basing sideways here. And let's just like in real trading, we'll start from the top-down approach here, okay? Had a small gap up, not a significant gap, okay? I did like how we got this. This was a nice professional gap. And I liked how we were doing a buy setup inside of that. So we had a wide range bar, triggering a daily buy setup inside a very strong stock. Daily chart strong, weekly chart is strong, monthly chart. There we go, monthly chart, right? So I like on the larger time frames, 60-minute up, I like everything as a long, especially the daily chart, right? So my picture of power is that we have a wide range bar triggering a daily buy setup, and at the same time, we also have the Qs. Let me just pull the Qs up. Okay, here's the 2-minute of the Qs. At the open, make this a little bit bigger. Okay, here's the 2-minute of the Qs. Into 10:30, right here. Okay. So we got the overall market, right? The Qs is in an all-out downtrend, 2-minute downtrend. It's about to trigger another 2-minute sell setup here. And the CF had a wide range bar on the 15-minute chart, and the 5-minute chart had a wide range, had a nice bullish move here, was basing sideways and was just about to break out, right? So this was a perfect example of relative strength. Qs are doing a sell setup, look lower, and the CF is about to break out to new highs here on the day. Okay, so that was the picture of power that I was using. Daily buy setup and also relative strength compared to the market. Okay, just putting that chart back. Okay, so the entry I think was pretty clear. It was a long over the high of the day here. I think I said 94 here, right? So it was 10:30 reversal time. The Qs was possibly putting in, or possibly we were in a support, we were looking lower, and this was about to break out to all-time highs at 10:30 reversal time, okay? And we based for 20 minutes here. All right, so the entry is really, really clear. Now, the topic that we discussed in the Black Room that I also want to discuss with you guys here is, where do we put the stop? Okay, so there's several locations. One is, I like this price action we got just before the breakout, right? Point of transition, we're basing at the high of the day, we're not basing down here at the lows, so I like this. So there's a couple places to put the stop. One is, I could have put it right here. And I mentioned that I would have done that and posted it with that stop if we got a red bar, which we did not, okay? We could have put the stop here, could have put the stop here, and could have put the stop here, okay? So we're in this base. We have roughly equal highs up here. So the entry is pretty clear. But as far as stop location, there's four clear examples, right, of where to put the stop. Now, I, like a lot of people, want the stop as tight as possible because it increases my R to R as long as I don't get stopped out. Okay? So R to R is something to consider. I also want the safest stop to increase my batting average. Right? So if I have the safest stop, maybe all the way down here, then it'll increase my batting average because we could come into this 48.60 and continue higher and it wouldn't shake me out, right? So both of those are great things to consider when I'm looking at placing a stop. But there's one key thing that I use in all my trades that overrides and supersedes all of those, and that is I want to get out when the trend that's initiated from the pattern fails. That's what I use. That when I play a breakout, I'm looking for a continuation of the prior trend that we've had. When I'm looking for a buy setup, I'm looking for the initiation of a trend, right? And I want to exit when that trend ends, because what that tells me is that I was wrong on the entry, the trend is not continuing, or the trend is not starting, and so I therefore no longer want to be in the position. Okay? So the initial stop placement is really critical because, like I said, I'm developing my R to R, I'm looking at my batting average, everything is based off of that, and so it's important that I don't just arbitrarily choose where to put my stop because something looks good or I feel like this is safe here, and all of that's great information, but the underlying issue for me that hopefully will be the take home from this video is I want to exit a long position when the stock is no longer trending higher. I want to exit a short position and cover when a stock is no longer trending lower. That's when I want to get out. Okay? So the reason being, so here's the stop. The numbers that I put right here were 68, right here. Right? This was the entry, and this was the stop. This was 68. Now, I didn't get a red bar here, so I didn't put the stop here. And if I would have just gotten shaken out and then watch this continue, watch this continue higher, right? And go right to a nice target here. All right, and the reason why I chose this as a stop is because we had a wide range bar here, and we started to base sideways, and we're on the 2-minute time frame here, transferring into the 5-minute time frame. And what I'm looking for is this base here. I'm looking for a continuation of the 2-minute trend. And so the only place for me to put the stop when I am looking to take this breakout is where is the 2-minute significant pivot, and that's right here. This is the last pivot here when we came down here that we would have made a new high when we triggered. Right? We retested here, but the new high came from right here. This was the previous low. This was just some sideways price action here. There was nothing significant about this area. This was just some overlapping bars. But this is where the pullback started. This is where the pullback was. This was the area of support. This was an area of congestion. This was an area of support. This was the area of support that enabled us to move higher here, right? And so that's where I want my stop. Because if this area fails, then this whole pattern fails to me. Okay, so that was the stop. Once we triggered here, like I said, after we triggered, I said I was going to manage 5-minute significant pivots. And just like in my healthy trend videos that I did on Facebook here, we took I took 3/4 of the position as soon as we started getting wide range bars. Where? At the end of the move, right? At the end of the move when we were extended. And so I ended up taking 3/4, and then the last quarter just never followed through. We never got this 5-minute buy set up, so I ended up losing like $20 in the last quarter. This was, and I trailed under this 5-minute significant pivot here, right? And I'm glad that I exited there. Did I want to give all of this back on a quarter of the position? No, I didn't want to give half an hour back on this quarter of the position. But at any time, I was looking for a continuation of this 5-minute trend, and I was willing to give 1/4 of the position whether or not it would continue, right? And so far, it's just gone sideways here. Okay, so that was the CF trade. This was when, or the location-wise of where to put a stop and how I choose that. And what I'm looking for is the trend that comes out of the CF. Now, on a 15-minute chart, this is going to be different. I'm looking for a 5-minute trend to come out of a 15-minute breakout. On this base, I'm looking for the 2-minute trend to come out of the breakout, right? And so what I'm looking for is if the trend that comes out of the breakout, if that fails, I don't want to be in it. And that's why I didn't put my stop here, and that's why I didn't take a 1-hour loss on this, and I ended up taking a 1-hour profit on the CF. All right? So this was really critical for me for establishing the initial stop location. Took me a while to kind of realize what I was going for here, whether I wanted to use a really big stop, a really tight stop, and this is just what works for me. What works for me is when the trend that comes out of the pattern that I'm looking to take, whatever pattern it is, when the trend comes out of the pattern, if it fails and that trend fails, I no longer want to be in it. Okay? All right, hopefully this was helpful. Let me know if you guys have any questions. As always, stay in process. And come check us out in the black room. We got trades like this going on all the time, and it's a little bit slower now, but there's still a lot to do, a lot of stuff to talk about, a lot of education and stuff going on, and yeah, come check us out if you're interested. All right, thanks everyone. Have a good day.